Hi, this is Zach with the Bulletin Board Heroes here at Zach's Traders Cafe for Wednesday, the 18th of December. Starting off with the FTSE 100, which is still in this rising trend channel, which is the good part, but fallen below the 50-day line there at 82.30. We need to get back above that really to get us back in the prospect of heading up to the top of the range, 8400. Otherwise, there's still the risk that we head down to the bottom of the channel there from this time last year as low as 8100 by the end of this month. So not great looking picture there. RSI below neutral 50 at 44, so that gives negative pressure, as does the way that the 50-day line is now slightly falling. But basically, a market going nowhere rather than down, one would probably say. Moving on to the DAX, and here we managed to consolidate at the best levels, or near the best levels, 20,200 rather, the floor of the latest range. And it looks like a mid-move consolidation, a bull flag ahead of a move to the upside. And the upside in the moment, at least initially, is the top of the one-year trend channel there, 20,800. Worst case at the moment is we have to test and fill that gap floor down towards 20,000, but looking pretty strong at the moment there at the DAX. The Dow is next, and here we've had consecutive days of consecutive down days. The worst scenario was, or is, that we have to head to the floor of that rising trend channel there from August. That's around 43,000 before we can turn up, but amazing to see so many down days, especially given the initial euphoria with the Trump victory. This stage, earlier proper end of day close back above yesterday's resistance through 43,500 really would delay the prospect of at least a test of that price channel floor at 43,000. RSI at 40, which is actually not that low. We could actually still go lower, and that does give us the hint that maybe this market wants to fill that November gap down to 42,300, but a little bit early to say that, especially given the way that the 50-day line is still rising well. On to Bitcoin, which hopefully will cheer us up, and here you can see that we've actually pulled back after the spike through towards 110,000, peak there around 108,000, but the current situation is that we're back at the resistance line there from April. That was one of our previous targets at 104,000. Ideally, on this latest retracement, we stay in that 103, 104 area, given that 103,000 was the initial December peak. Worst case at the moment, probably down towards 98,000, which was the recent support for this market, but still doing well. And the only negative, I suppose, really from the RSI is that we've got some bearish divergence in this, our higher highs over the last couple of days, but the RSI not breaking or sustaining that overbought 70 level. Best case at the moment still for this market is to head up to the resistance line projection there from March as high as 120,000 by the end of next month. On to gold, and here you can see that we're doing probably what we've almost expected this market to do, which is find support towards the floor of the recent range and the floor of that rising trend channel from February. That's at 2630. At least while we're above that, we've still got the uptrend going nicely and could head up as high as 2,900 by the end of next month. That looks like a bit of a punchy call, but initial resistance there through 2750, and that feels more comfortable. RSI now below neutral 50 at 47, so a negative tinge there, but hopefully that 2630 area will do the honors. Moving on to the stocks, and quite an obscure selection at the moment. We've got the return of Active Energy, which I suppose, given the 3x rise for the shares, implies that not many people were expecting it to come back. What has happened, though, so far is that we've filled the first gap down there, which was around 0.17, and broken through that, so that's a big tick. The second level here, though, is the second gap to the downside, the previous one, which was back in April, and that gives us a suggestion there that we could head up as high as 0.37. So basically above the latest gap there at 0.17, looking for 0.37 as a best case scenario target. Obviously, these situations where it's just a big squeeze tend to be very, very volatile indeed. Moving on to one of the more obvious winners of the Bitcoin rally, and it is Coinsilium, which actually came up with some Web3 news today. We've been following this from the lows, and basically the shares hitting our big ambitious target there towards 4 pence, which was delivered when the shares were still well below 2.5 pence. The next level up is 5 pence, the red line there, and that's one from the early part of 2022. Best case is up to basically 8 pence, and that line there from late 2021 by the end of next month. But all of that really assuming that we stay above recent support for the shares in the 3.8 to 3.9 pence area. The other point to note is that we had a golden cross at the end of last month, so the shares are basically being driven by that very strong signal. Onto a stock which has also rehabilitated itself in the recent past quite well, but it's Gfinity. Here we hit our first target there at 0.03, and we seem to be heading quite rapidly towards the next one, which is 0.065, hoping to do that well before the end of next month. But this V-shaped rebound there, and also we've got the 50 and 200-day lines both rising into a golden cross, something that suggests that we are in the strongest part of the cycle. Upside valid, at least while we're above the latest resistance there at 0.045. Moving along to a stock which I think I covered quite recently, but it's Helix Underwriting. Here we've got a rising trend channel, and looking for, now that we've hit that and we're trading around it, basically £2.35, looking for a fresh leg to the upside, which is the upper parallel of that rising trend channel. So maybe as high as £3 by the end of next month, while we remain above the £2.25 area. Moving on to a stock which is of interest at the moment, in the sense that we've gapped up through the 50-day line and gapped up off the low. It's basically a bear trap gap reversal, because the low in February was around 4.75 pence. Above that particular area, looking for the shares to hit as high as 9 pence by the end of next month, especially if we can get a decent end-of-day close above the 200-day line, just above where we are at the moment. On the downside, ideally, we stay above today's low, which is 5.25 pence. Onto a stock which is very pleasing in terms of both the fundamentals and the technicals. We were looking for around the 1.05 pence area for Sound Energy, and obviously great news from the company. I interviewed them the other week, and above 1.05 now, looking for as high as 1.8 pence to be hit by the end of next month or even sooner. The other good news at the moment is the way that both the 50 and 200-day lines are rising. So that suggests we're in the run-up to a golden cross, which should power the shares yet further. But a great signal there, bear trap gap reversal, and the shares making good progress, and upside valid at least while we're above that target that we had there, just above a penny. On to Tower Resources, and here you can see we've been in a triangle for quite some time after the big move up that we had at the end of September. Current situation is we've broken recent resistance around the 0.03 pence level, and above that looking for up to 0.047 by the end of next month. Moving along to another stock which has been basically followed here for quite some time within that rising trend channel from August. Top of the channel there on Valerium now up to 18 pence, and we're looking for that while we remain above the 50-day line there at 11 pence. Both the 50 and 200-day lines rising after that golden cross in October. And the other positive point is the way that for December we've had a RSI rebound above the neutral 50 level, and the shares making good on that. Now the esoterically named Windar Photonics, which is next, and here we'll be celebrating a golden cross today between the 50 and 200-day lines. Top of the channel there from this time last year, heading for 65 pence, which we're looking for by the end of this month. In fact, we're probably looking for much more here, the upper parallel of that rising trend channel, heading for basically the mid-80s by the end of next month. So let's see if the shares can do that. Looking for the best case scenario, at least while we're above the 50 pence level. Finishing off with the stock which has had quite a flat year in terms of the share price, but looks like it's having another go at improving itself. We've broken out of that falling wedge and broken above the 50-day line there for Zephyr at 3.05. Initial target here up to the rising 200-day line at 4 pence by the end of next month, backed by some bullish divergence in the RSI window as well. So lower lows for December, but higher RSI trace. That's it from me today. More updates tomorrow.